Well, we've actually seen a really strong U.S. economy this year when it comes to construction. When we look at not only the indicators, but even the elevator market itself is up double digit this year. So construction is strong. Mainly multifamily is where we're seeing the big strength. As people may move around and shift to some of the smaller urban locations, there's still a need. There's still hospitals, schools. So we've seen strong growth. Our order growth this year is over 20% in North America. So very strong indicators, which give us really strong hope for next year in terms of sales and backlog. Our backlog is up 12% globally in constant currency as we ended last quarter. And so we've got a lot of work ahead of us, and our colleagues are ready and ready to go.
Does sound promising. To what extent is your fate linked to what happens with China? And we talk about China in the context of being a huge source of demand for global products, your industry included. How has that affected your own industry? And also, what is the look ahead going into next year with expectations of a possible slow reopening?
Yeah, well, we've certainly seen slowness this year in China, and the elevator market itself, we think, was down about 15%. The service market in China, though, is growing significantly, high single-digit compound growth. There are 7 million elevators right now of the 20 million in the world in China, and they all require safety and service continuously. So our service business, which is 80% of our profits, is strong. We expect China to bounce back. Probably not first quarter. We think that after the lockdowns are lifted, it'll take a little time for some work to start and for us to have access to construction sites again. But we're encouraged second half next year of 23, we think is going to be strong in China.
Okay, that's a good takeaway. What about the supply chain build-up that we've been talking about the last couple of years? How has that impacted you? And also, do you get a sense that things are sort of normalizing now, that there are less bottlenecks?
Yeah, I think the bottlenecks are coming down. We've had a pretty resilient supply chain. We have 17 manufacturing facilities across the globe, and we've had a strong, resilient supply chain to where we have not missed a delivery. But elevators don't come off a manufacturing line as a completed product. They do get completed in a hoistway at a new construction site. So we've been able to be flexible and resilient. We've dual sourced, and we source local for local. So we've had the ability to shift our supply chain around to assist. It's nice to see commodity prices coming down in China and in the Americas. We hope to see them come down here in Europe soon. But we're watching all those closely and locking in where we can and being dynamic and resilient.
Judy, I know that sustainability is also an important part of your business model. How have you had to rethink the way you physically manufacture products in light of placing sustainability at the core of how you're planning ahead with your strategic vision?
Well, so for us, sustainability has always been integrated in with our business strategy. So our product is very energy efficient. As a matter of fact, we have a whole suite of elevators that actually distribute power back into the building. Elevator buildings do emit a lot of greenhouse gases, but elevators are a very small portion of that. So we do turn to our factories, and we have, and we just received our first certificate on zero waste. All of our factories are ISO 14001. We use sustainable and regenerative energy and to the best of our renewable energy in almost all of our factories. And we've made commitments to ourselves and public in terms of greenhouse gas emissions, not just in our factories, but in our vehicle fleet and in the buildings that in our 1,400 branches where we live and work.